Good morning, guys. It's 7:58 on Monday, the 23rd of March, 2026, and that means that we have completed 3 years and 51 weeks of this roughly 8-year fire journey, or fire experiment if you prefer. Let's have a look and see where the market is just before opening today. Currently, the Vanguard S&P 500 exchange traded fund traded on the London Stock Exchange, current price 93.17, and pardon me, as you can see just beneath that, down roughly 1/5% at close on Friday. Now that doesn't tell the whole story. If we zoom in a little bit, you can see that there have been some red candlesticks there over the past good little period anyway. I mean, there had been some red candlesticks back as far as mid-January, but they were pretty limited. Not really much to talk about. But in more recent times, you can see that they have increased in size and effect, I suppose. So just a quick look to see how the portfolio is looking itself. So currently the portfolio value sitting just below 31,000, with a return on investment of about 25%. There are 332 shares in the portfolio with an average purchase price of 74.33. So the just as I finished saying that, the market has opened apparently a significant downward drop at open. Just showing 1.25, so 1.25% drop there as it opened. Whether that will stay that way or not remains to be seen. But of course, we know what the reasons are for this, and just in case anybody's watching it several years later, basically this has to do with the conflict with Iran, for the most part, but there are also conflicts ongoing between the Israelis and Gaza, and the Ukraine and Russia, and all these wars here and there are having an impact, but the biggest impact in the markets appears to be the Iranian conflict, because we have seen significant price increases at the pumps as regards fuel for cars and lorries and whatnot. And the prices of home heating oil have significantly increased as well. Now that also happened a little bit at the the start of the Russia-Ukraine war. I don't think it was as significant, but now it seems to be a little bit more of a problem, particularly regarding this Strait of Hormuz. So that is probably what's the cause, if you like, of that little drop there. But anyway, let's leave the politics to one side and get on with the investing. So before we have a look at the notifications, let me draw your attention to Monzo. Okay, so as you could see, there are affiliate links in the description there, one for Monzo and another for Smarty Mobile. If you're interested in changing your bank or adding another bank to your list of accounts, please consider Monzo, and please consider using the affiliate link. Equally, if you're not happy with your mobile provider, I personally use Smarty Mobile, and I find it is pretty cheap and basically gives you everything you get with everybody else. So what's not to like? Um, right, let's have a look at the notifications. Super Micro down 25% as US prosecutors indict employees for conspiring to smuggle Nvidia chips to China. Goodness. I hadn't heard anything about that, but that sounds pretty serious for those involved. Um, Potentially, yeah, that's basically what do you call that? That's industrial espionage, basically. And the notification before that was the previous purchase. Now, as you can see, that was done 5 days ago. And although I do generally aim to try to stream weekly, just with the work schedule that I'm on, it doesn't always work out exactly. And I do prefer to stream as early as possible in the week. So if I'm able to on a Monday, I'll do it on a Monday. And if not, as soon after as I can. And generally it works out to be roughly about the week. But anyway, just I suppose as a point of interest, let's note the price that we got for our investment last week. So it was 95.25 per share. The market currently sitting at 91.96. So we will be able to dollar cost average a little bit. We'll be buying it significantly less than we would have been otherwise. But before I do that, I just want to draw your attention to, if we follow this, the sort of current market value price back, just to see when the market was last at that point, just to get some kind of an idea as to how far back it has come. So according to the graph, we're somewhere in around there, and if we look down to the bottom, I can see that the last time the market was at that price was around about the 15th of September 25. So that's roughly 6 months ago. So I suppose on that basis you could say that where the market is now, it was last there 6 months ago. And the time before that was basically just before Donald Trump's tariffs announcements, and that was in around about January 25. So it's it's interesting just to see. To a certain extent, I have noted in the past that as the market as time progresses and you see the movement in the market, typically what seems to happen is that it will pass a certain price point a couple of times before increasing beyond that point, never to return again. Normally that seems to be the way it goes. I mean, if you look at the COVID effect there, basically, the market had hit this point. It dropped back, recovered again, and actually never fell back there again. However, if you look at the way the market moved during the time of the Ukraine, or the start of the Ukraine conflict, I'm just looking for my little things that I can draw on here. Don't know if there is anything I can really draw on to illustrate. Oh, here we go. So, if you were to basically put a line across there. And you can see that the market first hit this price point around about November 21. It then rose, it fell back below that point in January 22, hit that point again in March 22. By May was back below it again. And as you can see, it just is up and down, up and down, up and down, and it's passing the same price point several times before finally clearing that point and moving on. And as I say, then we had Donald Trump's tariffs announcements, which caused a really significant drop at that time, before then showing a V-shaped recovery, not that dissimilar to the one after COVID. If you look back there, we had a steep fall to begin with, and a more gradual recovery, but still a rapid recovery. And we see a similar pattern there for Donald Trump's tariff announcements. Hard to know really how long this current pullback is going to last. But as I say, as things stand at the moment, we are going to be able to dollar cost average a little bit. So we're going to be able to buy a little bit more for our money. Let's go ahead and do that. If you're a regular viewer to the channel, you know that each week I invest roughly £120 into the Vanguard S&P 500, seen here on the Trading 212 practice platform. And at the current market value, that is going to be able to buy us roughly 1.3 shares. Let's review that. So as you can see, it's a market buy. The market is open. We're not putting any stops, limits, or anything else in place. We will send it through, and we did indeed buy 1.3 shares for a purchase price of $91.90. And hopefully things have updated on the right hand side here. Now I forget what the portfolio value was when we started the video. I know the numbers will have changed from that point because of the 1.36% drop now. So we're probably now actually at a slightly lower point than we began the video. So that the new portfolio value after that investment, but including the fall already this morning, is 30,600 odd. The return on investment reduced a bit, now down to 23.5%. We now have 333 shares in the market, with an average purchase price of $74.41. And there you go. That I think there's value in beginning the live streams just before market open, because it does let me capture the sometimes significant moves that can happen just as the clock strikes 8, if you like, and markets come to life, especially on a Monday morning, because obviously any news or anything that happened over the weekend hasn't been able to be taken account of until markets actually open, and typically then that's what you see first thing is a little bit of an adjustment in either direction, and it's just the way it is. It's one of those things that that happens. But anyway, as I say, we are still in the green on the whole. Not quite to the tune of a quarter, but we're up 23.5% there. So Even if you had simply fired the money into a well-performing ISA, you would still not be anywhere near this kind of result after almost 4 years in the market. And nevertheless, even with those volatile actions that we have seen, we are still actually doing pretty well. Guys, that is going to be it for today. If you've been watching, thank you. If you're interested in following the journey, subscribe. And if you thought this was a particularly good one, why not give it a thumbs up? As always, any comments, criticisms, suggestions, or anything else, please pop it in the messages underneath, and I will try to respond when I actually notice it, because most of the time there's no engagement. So it would be great to see any engagement there is, especially as we are approaching the halfway point now, and it's interesting to see where things are at around the halfway point. I might actually at some point pull up the graphs, or not the graphs, but the Excel sheet, which really is kind of the forecast, if you like, for what should happen over time, and then we can compare that with where we actually find ourselves in the here and now. But in the meantime, guys, have a good week. I will be back next week with more. But other than that, from me, that's it for now. Thanks for watching.